Hi, everybody. Welcome to Wall Street Wednesdays. I'm the darling of Wall Street, and today we are going to talk about the difference between day traders, swing traders, and investors. But before we get started, remember, I am not a financial advisor. This is not financial advice. And please, 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 you have to do your own research. Okay? And make sure you like and subscribe and share this out with someone who wants to get started. Okay? So, now let's talk about it. Day trading, swing trading, and investing. All three very similar, right? They're very similar, but they're completely different games. And most beginners don't know which game they're actually playing. And that's how they end up losing tons of money. So today, I'm going to show you all three games and the one trap that mostly every new investor falls into. So let's get started. Let's talk about the day trader. Day traders buy and sell within the same day, right? Within the same day, within the same trading day, they're entering and exiting trades in pursuit of getting that money, getting those quick gains. They're glued to their screens. They're constantly looking for stocks with volatility and the potential to move in the same day, right? In the same trading day. And some trades could last minutes, they could last seconds. You could go in and out and come back in and out again. But regardless of the outcome, day traders close their positions before the market closes, period. And many experienced day traders use stop losses, right? They use stop loss orders as part of their risk management. It's part of their strategy. And a stop loss helps limit potential losses. If a trade moves against them beyond what their predetermined level was, they're out of there. Even if they got to take a loss, they're going to take that loss. So, for me, here's my thing, right? I'll day trade. If I see an opportunity, I'll take it. But if that trade doesn't go as I planned, I'll hold it. So I'll hold it because guess what? I've already done research on that company. I'm not jumping into a day trade on a company I didn't do research on. So as long as I genuinely don't mind owning company, right? If I don't mind owning that company, that's my day trade could turn into a swing trade. So that brings me to the next thing, right? A swing trader. So here's the thing about a swing trader, right? And I really love swing trading because, man, I love swing trading, but you can stay in a swing trade for days and weeks, right? The company, I usually look for companies that are undervalued, companies showing momentum. I catch the wave, I ride it, and then I'll get out and I'll go in and out, and it could be for days, it could be for weeks, sometimes even months. The goal is to hold until they've reached a profit that you're comfortable taking. So I will hold it until it reaches a number that I want. And personally, I develop a feel for these stocks. Like, I can't explain it. I know that might sound crazy, but it's like a feeling that comes over me. It's like I'm studying the company, right? I'm following the charts. I'm understanding the fundamentals. I'm learning the technicals. I'm listening to respected analysts, right? And most importantly, I'm doing my own research, right? So because let me just say this to you, right? And hear me. Even the best investors and analysts in the world, they can be wrong sometimes. And that's exactly why you have to do your own research and not only rely on someone else's opinion. You have to understand what you're buying. You have to understand the company, period. I've done that, right? I've done my homework. I'm comfortable holding a quality company longer if it takes more time. You know why? Because I know that I've done my research and I believe in that investment. I believe in that company. And sometimes that means now becoming an investor because I'm going to hold it way longer than I anticipated, and that's fine. So let's talk about the investor because investors hold for years. There's short-term investing, mid and long, right? It could be up to 10 years, but they live in years. They buy quality companies and they allow time to do the heavy lifting. And as these companies grow, the value of their investments can grow too, and they can grow substantially. And depending on their goals, you can take profits along the way, right? You could continue to own part of the business and still take out some profits. And that's what I love about investing, right? And another strategy that I personally love is covered calls, right? And I'm going to dedicate an entire episode to that because it's one of my favorite strategies. It's one of my favorite things to do. And like every strategy in the market, it has its advantages and it has its trade-offs, but understanding when it makes sense is what's so important. And why I love it is because it gives me that, oh, I can't wait to get to that with you. Okay. And just remember, none of these approaches are wrong, but each one has different sets of rules. And mixing up those rules is where people get hurt and get caught out there. So you don't want to do that. And some people genuinely have a need for speed. Like me, I got it. I love the speed. You know, I love it, right? The question isn't whether it's bad, right? Trading isn't bad, right? The question is, are you playing the game correctly? Are you playing it the right way? And have you figured out which style is best for you? Have you figured out like what your personality is, what your goals are, right? Because these are all things you got to figure out. Like for me, I do all three. I actually love the sport of trading. That's why I keep a separate brokerage account for trading and I keep one for my long-term investments. So when I say I love all three, I'll swing trade, I'll day trade, I'll invest. Let me say that again. I'll day trade, swing trade, invest. If I see a day trading opportunity, I will take it, right? If I find a great company that's temporarily on, it's on sale or it's experiencing volatility, guess what? That's exactly the kind of setup I love. I'm in there because I love that speed. I love trading volatility. I can't even tell you how much I love that. But I only trade companies I've researched and would be comfortable owning if the trade takes longer than I expected. That gives me flexibility to adjust my time horizon instead of making an emotional decision, right? That's so important. And one thing I encourage everyone to do, please dedicate just 1 hour a day to learning. It's just 1 hour a day. Just dedicate 1 hour a day to learning. Learn one new investing word, right? Learn, read a few paragraphs, learn about a company, right? Watch some financial news. You just watch it, just listen to it. Listen to a podcast, a financial podcast. Use platforms like, Seeking Alpha to read different points of views or TradingView to begin to understand and learn technical analysis because you need to understand and learn that. If you hear terms like a 50-day moving average or a 200-day moving average or an SMA or an EMA or RSI or support and resistance. Don't let those words intimidate you. First of all, you need to know what they mean. You definitely need to know where the support and resistance levels are. Like you have to know these things. And you don't have to learn everything today because we're going to unpack them together one lesson at a time. But you need to learn them little by little, okay? And that's what I want for you. Knowledge. Knowledge is key. Hear me, right? So today's word of the day is time horizon. Your time horizon is simply how long you plan to hold an investment before you expect to need the money. And this is very important. I'm going to say this forever. It's one of the biggest differences between a trader and investor. It's not an app. It's not the charts. It's the clock. It's time. Okay? So you have to make sure you don't need that money. Now, here's our darling dollar move. If you got the need for speed, trade shares of companies that you would genuinely be happy owning anyway. Don't risk money you need. Don't risk money you can't afford to leave invested. And that's the part I'm talking about. I'm going to say that forever. And before you trade options, right? Make sure you fully understand how they work. Please do not try to trade an option if you don't know what it is, what it means. And here's why. Don't let your friend walk you through it or how to get to it and you don't know what you're doing. When a share trade doesn't go your way, you still own part of a real business. If your investment thesis is still intact, you can continue holding the company and wait for that opportunity so that you could sell at a price you're comfortable with. Guess what? With an option, that's a hold. It don't work like that, right? Options are different. They have expiration dates and they can expire on you. And what that means is that time can become your enemy. If the stock doesn't move the way you expected before the option expires, it can lose significant amounts of value or even expire worthless. Now, imagine that investors' time is on their side. Options, time could be your enemy. So trust me, I learned that the hard way. It was one of the biggest money I ever lost in the market was trading options. And I'm talking about hundreds of thousands of dollars. That was my initiation fee. That was my lesson. And that's one of the reasons I'm starting to buy quality companies, right? I'm owning shares. It gives beginners more flexibility while you're learning how the market works, right? That's what we're doing, right? So we'll break down options and covered calls and all of those strategies in future episodes. But that's not where you are today, okay? Right now, what I want you to do is build a strong foundation. And that's what we're going to do first. We are going to build a strong foundation because patience is one of the biggest and greatest advantages an investor can have: patience and time. And that's exactly what we're doing. We're building your foundation with patience and time, right? Okay, so here is the darlings' bottom line, my darlings. You don't have to pick one lane forever, right? But you do have to know which lane you're in and how to move in that lane. And you have to understand that lane, right? And speed is fine, but confusion is very expensive. And I mean very expensive. So remember, you don't have to be wealthy to start investing. You just have to start. I'm the darling of Wall Street, and I'll see you next Wednesday. Bye.